What's up, YouTube? I'm William Bitter. This is my channel, Money Thoughts. So today we're going to talk about what to do in a bear market. So bear market is when the stock market drops at least 20% or more from its most recent highs. A bull market is when the stock market gains 20% or more from its most recent lows. A correction is between 10 and 20%. Okay, so now that we know what a bear market is, what do we do when there's a bear market? I should probably preface this video stating I'm not a professional, I'm just a human being on YouTube, a pedestrian on YouTube, just sharing my thoughts and my strategies of how I deal with the bear market. Everyone is different. My general investment strategy is that I buy certain companies that I believe in and I invest in them long term. I'm going to tell you that it's extremely difficult to time the market. If you're an investor with a long-term investment time horizon, then it's really important that whatever money you invest, that you're not going to need it for at least 5 to 10 years or whatever your investment time horizon is. That's because the stock market is volatile, and the last thing you want to do is be stuck in a situation where you need the money and we're in a bear market, right? Where you're forced to sell your stocks at a loss because you need money now. It's really important to have like a buffer of income and cash that you can use so you don't have to touch your long-term investments, right? But even still, when the stock market is down, it really takes a toll psychologically when you keep looking and seeing your entire net worth has gone down by 40-50%, right? So I think psychologically, just understanding that bear markets are normal. So actually, let's look at this 10 things you should know about bear markets from Hartford Funds. I thought this was very helpful to like take a deep breath and just sometimes just understanding a little bit about the stock market and bear markets can relax you. So number 2 on the list is that stocks lose 36% on average in a bear market, but in contrast, they gain 114% on average during a bull market. So from number 2, the main takeaway is basically, while the stock market is volatile and you could definitely see your money go up and down, overall, if you're invested in the stock market in the long term, you should have a positive return. Bear markets are normal. So there have been 26 bear markets in the S&P 500 since 1928 and 27 bull markets. Bear markets tend to be short-lived. The average length of a bear market is 289 days, or about 9.6 months. So basically the average bear market is basically around 10 months. And the average bull market is basically almost 3 years. Another key point that stood out to me was number 7. Half of the S&P 500 index's strongest days in the last 20 years occurred during a bear market. Another 34% of the market's best days took place in the first 2 months of a bull market before it was clear a bull market had begun. In other words, the best way to weather a downturn could be to stay invested, since it's difficult to time the market's recovery. Because if you see these really positive days that are during a bear market, you might think, oh, we must have hit the bottom, and that's where a lot of people try to time the bottom of the market, and then the bear market continues. And then another 34% is when the market turned into a bull market, so it's really hard to know the difference. Anyway, so in other words, yes, it's extremely hard to time the market. So these statistics right here kind of show you like why I don't try to mess with it. I don't try to time the market. I just stay invested in whatever companies that I truly believe in. And if the volatility brings the prices lower, then I'm trying to invest more or hold on to it and wait for the stock market to turn around. So I love this graphic, and I'll post a link to this graphic as well. So S&P 500 real returns. In this beautiful visual, on the y-axis we have the year of investment, and then on the x-axis we have the holding period, right? And then the color scheme is basically from red to green. So this is showing a 0.25x, so that would be a negative 75% return. And then it goes up until you're break even. So white would be a flat cash on cash return, so no return. And then as you get darker and darker green, your returns move up to a more than a 10x of your money, or 1,000% gain. So just looking at this, you can see no matter when you invested, if you held for 20 years, you're almost guaranteed to have a positive return. And it looks like from the dark green, you're almost guaranteed to have close to a 10x return. And there's a couple years where I guess you could be a little unlucky and have a flat return if you invested just at this time or this time. And you definitely didn't lose any money if you invested for 20 years. And then as you can see, if you're only investing between 0 and 5 years, there's a much higher chance of breaking even and losing money in the stock market, especially certain periods of time. I hope this visual encourages people to invest long term, because I really think this is a powerful visual to check out. So now just like kind of understanding a little bit more about bear markets, bull markets, overall stock market returns. Even when you understand all of this, like looking at your net worth and seeing that it's dropped by like 50% really takes a toll psychologically. The way that I personally deal with this is I just focus on things that I can control. So that might mean, you know, working overtime so I can put a little bit more money in the stock market. You know, technically, if you're not investing money that you're gonna need anytime soon, then a bear market shouldn't actually affect your day-to-day. So that means that it's merely just a psychological pain of looking at the numbers, right? But that also means that you could just choose in those moments not to look at Robinhood, you know, avoid looking at the stock market for a while and just go do something healthy. Go to the, you know, things that you can control are like going to the gym, feeling good, feeling healthy, eating healthy, hang out with friends and family, doing things that make you happy, because ultimately, you know, that's what life is all about, and just doing things to get your mind off of the bear market, right? I've really found that exercise really gets my mind off of a bear market and makes me feel healthier, and ultimately health is wealth, and this is way more important than your financial health, is probably your physical health. So there's a lot of people that during a bear market they kind of panic and they think, oh my gosh, like should I sell now and cut my losses now? So my opinion is this, like, first of all, it's never good to bring emotions into financial decision making, but it happens. And you know, like if you're panicking and you're thinking about selling and cutting your losses, like I think it's really important to think, like, has anything changed with your investment thesis for that stock or index? And then if it hasn't, and the only thing that's changed is the price, then rationally it's actually a better deal now for you to invest in that same investment, even more than when you bought it at a higher price. Now you should want to hold on to it even more. So that's, you know, how I would talk myself off of a ledge if I was thinking about panic selling. And it's a lot easier to talk yourself off of the ledge if you've done the research and you really believe in what you're investing in. Where if you just threw money into whatever because someone told you, then it might be a lot harder to keep yourself from panic selling, right? So I think some key takeaways are: bear markets happen, it's hard to time the market, investing long term is more likely to give you positive returns. As long as you're only investing money that you won't need to touch for a long time, then a bear market shouldn't affect your day-to-day life. Focusing on things you can control and taking your mind away from a bear market can help psychologically. Try to avoid making investment decisions based on emotions. Stay positive. Volatility in the stock market is the price that you pay to have higher returns than a savings account, which will give you nothing. And in my opinion, the volatility is totally worth it. And anyone else that's not currently invested in the stock market, I would encourage you to consider it. I think now is probably a good time to enter the stock market. These are only my opinions, and you should probably do your own research and make your own decision, but I don't know, look into it. Oh, also really quick before you guys go, I did open a merch store. So you can get these t-shirts, and I've got this hoodie. It's got my friend's dog hair on it from last night, but got this nice hoodie, and of course the beanie. so yeah, check out my merch store. Link is in the description below. If you guys want to follow me on Twitter, I'm on Twitter at WillBitter. Also, if anyone wants to direct message me, probably Twitter is your best bet. Happy bear market. Until next time, guys. Peace.
Save and invest your money.